Welcome back to the intersection of money and power. Now, the midterm budget policy statement is intended to reflect government's position from previous budget forecasts for the fiscal year. But with the introduction of a percentage point increase in VAT this year, the 50 billion rand stimulus package announced by President Cyril Ramaphosa, as well as the recent job summit, should we expect more from this year's mini budget? Joining me from this discussion is Deon Gouws, who is the Chief Investment Officer at Credo Wealth. He joins me via Skype from London. Mr. Gouws, I thank you for your time, and I begin with a question that Tito Mboweni himself asked. Where is this elusive growth going to come from for South Africa?
Thank you very much for the opportunity. And yes, that is ultimately the million-dollar question. You've referred already to the stimulus package, and one hopes that that would help in the medium and longer term. But ultimately, the growth is only sustainable if it comes from the business sector. And it needs to come from companies investing. It will be a function of, hopefully, economic growth, and ultimately also tied to the fortunes of the global environment within which we find ourselves. And that is coming into some headwinds as we speak. So yes, it's elusive indeed, and it's hugely challenging, I think, to present this statement tomorrow within the context of all these headwinds.
Now, Deon, South Africa has been on a downward trajectory really since 2013. We haven't touched 2% growth since then. And when you see the rest of the world really picking up in terms of its economic activity, are you disappointed we haven't been able to take advantage of this? And also considering that we introduced that 1% percentage tax for VAT this year, is the new finance minister really under pressure to show us that the sacrifices we have made over the last 6 months have yielded positive results?
He's under huge pressure, and it's it's an unenviable position. In fact, if you don't mind, I'll use a little anecdote. There's this joke in the financial services sector about the worker who comes to his financial advisor, somebody like me, and he says, "Listen, I'm about to retire in a week's time, and I've got no pension. This is time for you to make a name for yourself." Here we've got a new finance minister. You've got income that's under pressure because of an economic contraction on the one hand. You've got expenditure that is ballooning because of higher than inflation wage increases in the public sector, as well as some of the state enterprises that are burning cash. And he's been in the job for 2 weeks, and you're asking him to solve all this after a very short period of time. I mean, it's an unenviable position. Doesn't matter how you look at it.
As you said, Deon, it's time for him to make a name for himself. 2 weeks, that's all you get on this of this poison chalice. Look, I feel for Tito Mboweni too, but the truth is voters who will be looking at next year's elections will be looking at this budget saying, you need to give us something concrete within all these increases that we've had. I mean, we've had increases from a personal, from VAT point of view. We've had other increases such as the petrol price. So people will be looking for real, tangible proof that government is doing better. Now, when you look at government expenditure, it's really high. And part of that is the government wage bill. Is there pressure is there pressure to avoid talking about cutting spending from a government point of view because we have elections next year?
Yes, I think that's a very pertinent question. I think the elections will put a spin on everything. And I think from that perspective, I think there's a part of the population that wants to hear exactly what you suggested. But on the other hand, the state departments employ 1.3 million people, so you don't really want to get rid of too many jobs there either. You mentioned VAT. Over the weekend, the minister tweeted and he asked for some creative ideas in terms of, inputs that he could perhaps consider for his statement tomorrow. And some of the creative ideas that I saw relating to VAT, for example, is that perhaps more items can be zero-rated, certainly some basic foodstuffs, things like chicken, which feeds a large part of the nation on the one hand. And you can pay for that with an even higher VAT rate on some luxury items like expensive cars, for example. That could go up to perhaps 20%. And I think that could, A, be practical and be quite a popular vote-gathering mechanism. Certainly not for those people who want to buy the Aston Martins and the Bentleys that get imported at R1 million more. But there's enough people that I think that will be popular with, and I think ultimately quite a fair tax. That's just one idea.
Deon, don't get my finance minister started. We all know that he's a big proponent of wealth tax. What is the likelihood that he could use tomorrow's budget speech just to feel the ground, if it were, to lay the ground for next year's budget?
Well, I'm certainly not a proponent of a wealth tax. I think it needs to be distinguished from, a tax on expenditure on luxury items as the one that I mentioned. I think from a tax point of view, I think there is a credible argument that income tax rates, as opposed to expenditure tax like VAT is, in the case of income tax and corporate tax rates, there is a credible argument that can and perhaps should be dropped. South Africa's corporate tax rate at 28% is amongst the highest in the world, certainly amongst the countries that we prefer to compare ourselves with. And if you go back to the stimulatory sort of economics, that we've seen in the world for the last, 30 to 40 years or so, if you drop tax rates, it engenders confidence, it increases investment expenditure by companies, it means that hurdle rates on new investments come down, and ultimately that's good for growth, and therefore, bizarrely, well not bizarrely, if you follow through the logic, you actually end up gathering more tax in the process because profits balloon and there's economic growth. So you can certainly, I think, make a case for lower tax rates. Do I think that's going to happen tomorrow or anytime in the short term? No, because from an electioneering point of view, that certainly won't be popular with the masses. It will send out a message that just sounds wrong. It will sound good for business. It will probably lead to new arguments about monopoly capital and the like. But I think there is a credible argument that could actually play a role. But that's something for the longer term, certainly.
Deon, you've heard all that you can by now about the ANC policy position from December when they decided to expropriate land without compensation. Are you disappointed that government has really just been bending that about without giving us policy certainty and therefore allowing the agrarian revolution they want to see?
Yes, I think the simple answer to that is yes, and I think most people are on the one hand. But I think a slightly more thoughtful position would be to say that one understands the ANC's position in this, in that there's an election to be fought and to be won in a year's time. And I think the true position will only evolve after that. If you want to take a glass half full approach, then I think there is reasonable hope that following a successful election, following a mandate that Cyril Ramaphosa will have for himself, his first mandate, bear in mind, he's still seeing out the term of a previous president. Once he has a mandate in place, then I think the policy certainty will come, and it will go either way. From a glass half full perspective, hopefully it will just provide the certainty that the market wants. It won't be dramatic draconian policies, and that then could lead to confidence and ultimately growth.
And another big talking point, of course, will be the Revenue Collection Agency. And it's been in some hot water on its own. Now we're going through a commission of inquiry that's looking into governance and tax administration there. But Treasury had set a 1.34 trillion rand revenue collection target. Right now, it sounds pretty optimistic from where we're sitting. How will that revise the numbers in terms of Treasury's own admittance that really we have to look downwards for the growth that we were expecting? We are no more talking about the 1%.
Ironically, and there's an article, I think, in today's Financial Mail that touches on this point, where it refers to the fact that even though the real economic growth may have been slightly negative in the last couple of quarters, which is the technical recession that everybody's talking about, and that informs the question you've just put on the table, on the one hand. On the other hand, because inflation has actually been higher than expected, it's been over 7%, where I think in the budget they spoke about 6.5%, that sort of number. That differential of more than 0.5%, in fact, I think it's closer to a full 1%, means that in nominal terms, profits are actually growing slightly faster than what people had forecast. And that translates into ultimately higher profits for companies and therefore higher tax collections as well. So from a nominal tax collection point of view, the collection agencies may actually be bailed out in the short term. Unfortunately, that is not a sustainable position because in the future, inflation is not anyone's friend when it comes to these arguments. But certainly in the short term, maybe it will be slightly less of a headache than what some people are fearing.
Deon, I want you to follow this and then tell me what you think. On the one hand, South Africa's had some real internal pressures, pressure on the consumer, pressure on business confidence as well. And on the other, on Friday, South Africa will be hosting an investment conference where they are hoping to woo investments into this country. I ask a two-folded question. Isn't government only as good as the number of startups that it can actually give birth to in its home country? And isn't it still expensive to come and set up shop in South Africa from a business point of view? In light of that, what do they tangibly say that will make an investor leave the first world or developed world options to come to the southern tip of Africa?
I think, you referred to the summit. In fact, the charm offensive has started. President Ramaphosa has written a piece which I think will be published in tomorrow's Financial Times internationally. It's on the website already for those people that subscribe to the magazine and that can read it online. And that's really trying to set out the framework to try and answer the question that you've asked there. He refers to startups in things like clean energy, for example, where South Africa has the weather, the sunshine, the wind, and the like, to really make it globally competitive in that kind of space. But there are problems with it. One of them is the policy certainty we spoke about earlier. People don't want to invest if they think that whatever they put down in the ground could be expropriated on the one hand. And on the other hand, South Africa is unfortunately not competitive when it comes to labor costs. And our fairly labor-friendly laws don't help in this regard. To have a very high minimum wage sounds socially like a good thing. And of course, if you're in that category of individual, of worker, then clearly you want it as high as possible. But having said that, in some cases that can lead to jobs that simply do not get created because people can't afford, to appoint the marginal employee. So frankly, high minimum wages are ultimately not the friend of business investment and therefore can stand in the way of economic growth.
I'm going to close off by asking you a classic South African question. Within the ruling African National Congress, there are some who embrace, some like Tito Mboweni, who embrace this neoliberal flirtation with capital markets. And then there are some other who are pulling towards the socialist end. Who do you see winning between those two? Because that will enable us to see where we are growing and how fast we can grow this economy.
I'm afraid I've got no idea who's going to win it, but I can tell you that I can only hope there's the free market side that does win. Because if that does not happen, then unfortunately we can be on the slippery slope that ultimately leads to examples like Venezuela and some others. I mean, Venezuela is just the most recent example in this regard. So my vote is firmly in the one camp. But whether or not that will prevail within the ANC, I think you're asking the wrong person. Perhaps you should ask the president.
Tough questions. Well, thank you for making the time to provide us with the answers that you can. And when you're on an investment drive, do whisper to the president. Thank you very much. That is Deon Gouws, who joins us from London via Skype. He's the Chief Financial Officer of Credo Wealth. Thank you very much, sir. We'll have more Political Capital coming to you this Thursday at 6:30. Until then, keep it locked on CNBC Africa.